Welcome to this explainer. Today, we are unpacking a truly wild Wall Street epic. We're going to dive straight into how a catastrophic professional failure, we're talking a career-ending, deeply humiliating disaster, actually birthed the largest, most influential investment firm in world history.
Okay, let's just anchor ourselves to BlackRock's reality today. $10 trillion. That is the mind-boggling amount of assets wielded by this firm right now. To put that staggering figure into perspective, if BlackRock were a country, it would literally be the third largest economy on Earth, sitting just behind the United States and China. They aren't just another name in the investment game, they are the undisputed largest asset manager on the planet, with a level of financial clout that's honestly almost hard to comprehend.
But the real story here isn't just about that sheer volume of money. The fascinating question we're answering today is how exactly a devastating professional disaster acted as the ultimate catalyst for this unprecedented financial power. It's a massive story of resilience, innovation, and turning a brutal personal setback into the ultimate financial comeback.
Section 1. A billion-dollar lesson. Larry Fink's rise and fall.
Let's rewind to the very beginning. Larry Fink was a middle-class kid from the sun-drenched streets of California. He takes his UCLA degrees and throws himself headfirst into the high-pressure, cutthroat world of Wall Street at a firm called First Boston. He starts working with mortgage-backed securities, which is essentially taking thousands of everyday home loans, bundling them together into one massive package, and selling pieces of that to investors. Well, Fink absolutely revolutionized his division. He was a total prodigy, catapulting his desk to a mind-blowing $1 billion in profit from a standing start. He was a Wall Street superstar. But then, the unthinkable happened. An unexpected rapid shift in interest rates caught him completely off guard. The financial models failed, and he suffered a massive, humiliating loss of around $100 million on a highly risky trade.
Now, what's really interesting here is how this humiliating failure fundamentally shifted Fink's psychology. It wasn't just a bad day at the office where you dust yourself off and try again, right? It taught him a harsh, searing lesson about the absolute critical nature of risk management. That massive financial sting permanently rewired his brain. It instilled this absolute necessity to deeply understand and predict market storms, rather than just blindly riding the waves.
So emerging from that wreckage, Fink assembled a totally unique toolkit. He combined the hard-won humility of his setback with an inherent instinct to innovate. And his new burning ambition? To create the world's largest asset management firm. But he made it his personal mission to build a company that was fundamentally different from the rest of Wall Street. He wanted a firm that wouldn't just react to the financial weather of the day, but one that possessed the highly sophisticated radar required to predict those storms long before they ever hit the shore.
Section 2. The birth of BlackRock.
By 1988, the financial landscape was evolving, and Fink was ready to turn his vision into reality alongside brilliant co-founders like Robert S. Capito and Susan Wagner. But getting this off the ground, it was a massive uphill battle. Wall Street at the time relied heavily on gut feelings, aggressive trading, and, let's be honest, sheer bravado. Fink wanted to rely on computers, complex data, and relentless risk analysis. And the elite establishment largely dismissed his tech-heavy, risk-obsessed ideas as totally unproven. But despite all that widespread skepticism, Fink managed to secure vital initial backing from the Blackstone Group. That provided the crucial lift his fledgling firm needed to launch this completely fresh, data-driven approach.
To actually execute this vision, co-founder Susan Wagner designed what would become their absolute secret weapon, Aladdin. Think of Aladdin as an ultra-powerful financial MRI machine. It's a proprietary risk management platform that looks deep inside an investment portfolio to expose every single potential vulnerability. It leverages technology to offer a single, unified view of a portfolio's full spectrum of risks. It was an unprecedented system, offering a level of security, foresight, and mathematical analysis that the market had simply never seen before.
Let's trace how fast this moved. They started their journey in 1988, laser-focused on fixed income. Those predictable lower-risk assets like government or corporate bonds. Well, they offered unheard-of insights into those bond markets. And because they were so successful, by the 1990s, they had rapidly expanded into mutual funds, serving both retail and institutional markets. Fast forward to 2004, and the firm is experiencing exponential growth. Thanks to their radical transparency and the sheer computing power of Aladdin, BlackRock officially became the most talked about, highly trusted firm on Wall Street.
Section 3. Surviving the 2008 crash.
Now, trust is only truly proven in a crisis, right? And the 2008 financial collapse was the ultimate trial by fire. It tested the agility and resilience of absolutely every financial institution across the globe. The global market was in total chaos, close to $2 trillion wiped out worldwide. Panic was everywhere. Yet, because of their obsessive dedication to risk management, BlackRock didn't just survive, they became a trusted lighthouse in a very dark sea. In fact, things were so wildly chaotic that the United States government actually had to turn to BlackRock to figure out how to untangle the toxic assets triggering the crash. Aladdin was quite literally the only system powerful enough to do the math and advise on these incredibly distressed assets.
Section 4. The ETF Acquisition Era.
Emerging from that 2008 crisis, not just as a survivor, but as a premier advisor, completely shifted their trajectory. They were now perfectly positioned for incredibly aggressive expansion. In 2009, BlackRock executed a totally transformative $13.5 billion acquisition. They bought Barclays Global Investors specifically to acquire their iShares ETF platform. And for context, an ETF, or exchange-traded fund, is just a brilliant financial innovation. It allows regular people to buy a diverse basket of different stocks as easily as buying a single everyday share on the market. This single, massive move catapulted BlackRock to the #1 spot in the global asset manager world almost overnight.
What this acquisition really did was allow them to manage money for essentially everyone. They built a vast, highly diversified client base. We're talking massive institutional investors and global corporations, all the way down to retail investors saving for retirement and even sovereign governments worldwide. They literally became the central nervous system of the global financial ecosystem, serving every conceivable corner of the market.
Section 5. The Future of Finance.
So the crucial point now is, how do they maintain this unassailable position in an ever-changing world? Today, their dominance is sustained through a colossal and incredibly diverse portfolio. They manage vast sums across equities, fixed income, and cash, right through to alternative investments and real estate. They have their hands in nearly every asset class imaginable. And underneath all of this dizzying complexity, that Aladdin platform remains the indispensable, continuously evolving backbone holding the whole shebang together.
But listen, the view from the top is incredibly complex, and being #1 doesn't mean the path is totally clear. Today, BlackRock has to navigate a minefield of challenges. They're dealing with tense, unpredictable geopolitical conflicts that can upend markets in a single afternoon, alongside persistent post-COVID-19 volatility. On top of all that, there's a massive shift in investor appetite toward ESG, environmental, social, and governance criteria. Investors are increasingly demanding that their money is used responsibly, which requires incredibly nimble solutions and highly innovative strategies from BlackRock to navigate these complex new waters.
Because of its sheer, unprecedented size, BlackRock now stands at a major historical crossroads. When you manage $10 trillion, you aren't just participating in the market. In many ways, you are the market. Their vast holdings give them enormous voting power. This means their proxy votes and laser focus on corporate governance and climate change can literally force global corporations to bend to their expectations. Their massive financial leverage allows them to directly shape corporate behavior across the entire globe.
Which leaves us with this final, really provocative thought. How will a single firm with this much unprecedented power over global corporate governance shape the future of our society? How will a firm that was literally born from a single man's devastating failure use its $10 trillion of influence to dictate our global future? It's a fascinating question to consider as we watch financial history continue to unfold. Thank you for joining me on this explainer. Keep asking the big questions, and I'll catch you next time.